So I see that Payments UK has been publishing their set of papers talking about the attributes of a world-class payment system, and they're putting a lot of focus on Australia's NPP.
Yeah, well, I think the interest about NPP from our point of view, I mean, there's two things to bear in mind. So first of all, the British version of NPP, what we call FPS, the Faster Payment System, is actually quite old now. I mean, it's been around for a few years, and we've seen how that's grown and developed, and we've seen the volumes. But NPP is actually going to be better than FPS in a few different respects. But you know, one of the primary ones is it's going to be built using more modern standards, which that sounds obscure, but what it means is that the payments information can contain much richer data, and so the opportunity to build value-added services on top of that, I think, will be greater than it has been so far in the UK. So it's really interesting from that point of view.
And you've had a fair bit of fraud in FPS, haven't you?
Well, fair bit of fraud is, I mean, what you've seen is because you can send money instantly from one bank account to another, the fraudsters have been quick to take advantage of that, and they do some quite sophisticated frauds. You know, ringing up old people and telling them, oh, you know, we're worried about your account being hacked. You need to transfer the money out to a safe account.
Yes.
They intercept the messages around house purchases that go through email. I don't understand why solicitors don't use WhatsApp instead of email, because it's much more secure. And so they send you a message saying, oh, actually we've changed our account, please send the money to this new account. And the problem is and you'll see the same thing with NPP, is because it's instant,
yes,
it's gone.
Yes.
And so 5 minutes later you realise, oh wait a minute, that was a fraudster.
Yes.
And you call up and the money's gone. So I think you'll have the opportunity to possibly build in some more sophisticated features around fraud as well. So I'm very curious to see how NPP develops.
So the deception's happening out of band, so kind of same old method.
No, there's nothing wrong with the system.
The money's going faster.
The way I sort of think about NPP, the first time I ever came down to Australia, which is the early 80s, I'd never seen FPOS before, and I was just absolutely blown away by it. Was the card, it takes the money out of your bank account and gives it to the shop, and you can go and put it in the ATM and see. I mean, unbelievable. But over the years, you know, it possibly has become a little bit more commonplace, and everybody has schemes now, and there are other things going on in mobile, and NPP is an opportunity for Australia to recapture some of that leadership, I think. I really do think that. By setting the bar high on the new infrastructure, they're creating an opportunity for some incredible new services, what you call the overlay services. It could be fantastic.
The other hot topic at the moment that, you know, it's kind of a surreal universe in a sense. There's a lot of discussion about the pays, and yet on the other hand, no one's saying anything, which has a particular context, of course, in the legal agreements that everyone signed.
No, I mean, we're all under those same constraints. We're all interested in mobile, Australia in particular, because the contactless infrastructure here is ripe for this sort of thing. But I would say, if you look at my sort of contactless microcosm, which is Transport for London, the biggest contactless merchant in the UK, even now, and we've had Apple Pay, for example, for some time. It's a tiny proportion of. I mean, I can't remember the exact figure, but I think 3% of contactless payments on the tubes and buses are actually Apple Pay. You know, the media very focused on Apple and all the new iPhones and that kind of thing, but out in the marketplace, it's not as exciting. And I think, you know, basically tapping your phone to buy something is not that interesting compared to tapping a card to buy something. I mean, it works pretty well. I mean, there's an advantage, you can take the phone, you don't have to take the cards, but you know what I mean? Like, it doesn't transform.
It's not life-changing.
No, it's not. But I think you're going to see a big change coming, because the thing that's interesting to me about Apple Pay, Android Pay, isn't the tapping. It's in-app. It's online. It's taking that chip and pin security and bringing it into the places where there's terrible security at the moment. And I think that is kind of transformational. If you can just click round on an app to buy whatever it is you're buying, cups of coffee or train tickets, or it doesn't matter, and you just put your thumb on or swipe your finger and go, actually that is quite transformational, I think. So yeah, so the tapping, you know, it's interesting, not going to change the world. But when you can do chip and pin in your browser, well, that's a pretty fantastic change.
And obviously that's got benefits for everybody, because you know, you more volume for issuers, less lost sales for merchants through having to kind of key in a 16-digit PAN into a tiny little screen with fat fingers. I think, reduce fraud rates.
I mean, I was just looking at some figures this morning from the US, where some of the early adopters for the Apple Pay in-app, they're talking about double, the rate. So quite often people would just, as soon as they saw you've got to type in your card number or whatever, they would just give up. And because of the fraud that you get, the merchants don't just suffer the cost of the fraud, there's also the cost of putting things right and managing it and all that kind of stuff. So taking fraud out of that environment is a really big deal. But also there's also in-app payments in certain kinds of apps. So there's in-app payments in that, you could imagine I've got a Coles or a Woolies app or something, and I can now you pay using Apple Pay on my. You could sort of see how that would be attractive. But there's also bringing payments into chat apps, social media apps. I mean, all of a sudden, if you've got reliable, secure payments inside things like Facebook and so on, you can see that's going to lead to some changes, And you've got the Facebook, Microsoft, they're looking at opening up the chat bots so that people can shop and buy and interact using these bots. I mean, that seems like pretty interesting stuff to me. Once you stir payments into that mix as well, it becomes a real transactional space. The payment mechanisms that we have now, whether I'm sticking a card in and punching a pin or tapping the card or tapping my phone, those are payment mechanisms that come from another age, right? If we're moving into a more identity, reputation-centric world, what use is it to the retailer if they find out who you are as you're leaving? You know what I mean? So the fact that they don't find out who you are until you get to POS, and that's not right for this new. What we need to do is we need to shift that identification and associated authentication from the checkout to a check-in. I mean, the retailer wants to know who you are when you walk in through the door, and that's what apps can do. That's what cards can't do. So that takes us into this different space, and the retailers can deliver. Look, if I go into a particular retailer, I go into McDonald's or something, nobody's going to provide a better point of sale experience than McDonald's do. Like, it's the McDonald's app which is going to be the best way for me to experience my interaction there. And that will become the channel for the loyalty and special offers and coupons, all that kind of thing. So the way the retailer can deliver a better service to me is by knowing who I am. The fact that I can pay when I leave, who cares, right?
But Dave, banks would say the same thing about their mobile banking apps. That if I want a mobile banking app that is the best for my customers, then I want to design and deliver that mobile banking app end to end as well. So how do those two things fit together?
Look, I think if the thinking is right about this kind of API-centric, Amazonized world, then there are two issues with that vision that immediately come up. One is, why is the bank making the mobile banking app? Like, since when did it become a banking core competency to make mobile apps? I mean, there are other people out there that can make better mobile apps. And like, if I've got two bank accounts or I change banks, I might want to carry on. I have a great app which helps me manage my money. Why should I change that app if I change bank accounts? Or, you know what I mean? Like, the bank account should be plugging into the apps. It's not obvious that a bank's core competency and resources should go into making mobile apps. The other thing I think about that is that if you have a situation where the bank has some idea that its competitive advantage in the future relies on locking people into some app that it's building, that seems not to learn lessons from history. You know, when I walk into Coles, I want to use the Coles app, and I want my bank payments to fit in with that. I go into Coles, they've got Bluetooth and all these sort of things. The app pops up, they know who I am, they know where I am, we can do all the loyalty coupons, blah, blah. You know, the scanner pops up, I go around and do my shopping, and I just put my thumb on and walk out. Well, that's a fantastic experience. Why is the bank going to get involved in that loop?
And one of the challenges for Australian banks is how they view these new entrants. Are these competitors? You know, is Apple or Google or Samsung trying to steal my lunch, or are they partners? And it's a real tension there. And I guess one of the other places we see that play out is the discussion that we've been having here over the last couple of years, and the the UK's and Europe's quite well advanced is about the relationship between banks and fintechs when it comes to data.
Well, actually, I think a couple of things about that. So, strategically, you have a class of organisations, Apple, Amazon, Google, Facebook, and so on, who are forming a kind of layer. The customer is in the world of Apple, the world of Google, the world of Facebook. And it's becoming increasingly more tempting for them just to stay inside that world and not come out. And that is problematic for banks, because if banks don't get that data, if they don't see what you're doing, where you're going, how are they going to provide you with better services? So you can see that sort of problem. Now, as it happens, I think it's plausible that the results of the Australian regulator investigations, Productivity Commission, around access to data may well go down a similar route to the EU and the UK, where it becomes mandatory for banks to provide the API interfaces so that third parties can get access to data. Those third parties would, of course, include Facebook and Amazon and Google. And that's potentially a big threat. So I understand that completely. On the other hand, it means banks can make new services that they don't have now, because they themselves will have access to other people's data as well. So, they could have an entirely negative and defensive reaction to this, and I think the European banks did initially. But I think that's sort of changing a bit now. It's if we're negative and defensive, we're just kind of handing it all over to Facebook and Apple and Google. It's time to have some better strategies to find services that we can deliver into that integrated, API-centric, appified space that other people will want. Not because they have to use us, but because they want to use us to do these kind of things.
So my sense is you think there's more for banks to gain than there is to lose in this discussion?
Well, I think, there are certain things that banks can't defend. We all understand the margins on payments are going to carry on going down. We all understand it's going to be about value-added services rather than themselves. Now, the question is, what kind of things could banks do that people like Facebook and Apple would find harder to do? And so for that, you want to look into sort of regulated spaces, obviously, but probably for the non-payment stuff, the non-monetary stuff. And, I'm very much of the opinion, and actually APCA and the Australian Payments Council have been thinking in that same direction. I'm not the only person that thinks this, that there might be services around identification, authentication, authorization, that actually provide the next generation of banking services. If anybody can do payments, then go and do the hard stuff instead. And the hard stuff is knowing who you are, right? It's the KYC and the kind of things banks already do. Finding ways to turn those into services in the new economy, what you might loosely call digital identity services, strikes me as being a reasonable strategy. There's some definite ways forward there.
Do you think Australians are ready to give their bank visibility into everything that they do? Is that what you're suggesting?
I'm not sure I know enough about the local market to say that. What I would say is Australians and Brits do share one very specific characteristic around identity, which is that we really don't like the idea of government identity. Right. Was it called Australia Card? Was proposed? Yeah. So that never went anywhere. And in the UK, our proposed identity scheme never went anywhere. The US doesn't have an identity scheme either. We're uncomfortable with the idea of the government managing your identity and knowing where you're going and what you're doing. Now, oddly, people moan and complain about banks, but actually they do trust banks to look after their stuff, including their identity, because the banks are a regulated institution. I expect banks to look after my data responsibly, precisely because they're regulated and would face punishment if they didn't. So this idea that the bank, it's a pat phrase, but the idea of a bank as a place where you store identity rather than storing money actually seems to me to be a reasonable encapsulation of a potential strategic direction in that space. It's my identity, my reputation. These are the things that are really important. These are the things that I want left locked up in the safe in the bank. And the identity that I use to go out and go shopping or interact with my mates or talk to people, those are identities that the bank could give me, for those kind of specific purposes, and I think that's not an unattractive model. In the same way that you take your cards and put your cards in your Apple Pay wallet, you could kind of imagine taking your IDs and putting them in there, and there'd be certain categories of IDs, bank IDs, which would be more valuable than others.
And blockchain, I think we are officially in the middle of the hype phase about blockchain. Lots of announcements about banks joining blockchain consortiums. What do you think the implications are?
Well, lots of announcements about Cuscal joining blockchain consortiums as well. So,
what do you think the implications are for banks? What do you think the possible opportunities are for banks in blockchain?
It's really early to say. The shared ledger technologies as a whole, remember, blockchain is only one kind of shared ledger technology, and the Bitcoin blockchain is only one kind of blockchain. So it's a long way from shared ledgers to Bitcoin. But shared ledger technology in general does seem to open up some potentially interesting new ways of business. It creates a more transparent environment where the opportunities for accountability are different from traditional environments. You could imagine sort of dissolving away the traditional kind of auditing and compliance, and you move into a space where the technology itself provides a kind of ambient accountability to the transactions that are taking place in it. That's pretty radical. The ability to run applications in that new space I think is potentially quite disruptive. I suspect that for most of the financial institutions that we work with, it's more about creating new kinds of markets that work in a different way for the modern environment. And those markets will gradually attract liquidity away from the more conventional markets, because that transparency will ultimately make them cheaper, because the costs that are out of control in most of those markets are actually regulatory costs, not technology costs. So if we can find new ways of doing things, which mean we can make big reductions in the cost of the regulation, that's much more attractive than trying to shave a tiny percentage here and there off of the cost of transactions. Again, I don't want to be too soundbitey about it, but there's this idea that shared ledgers are really more of a regtech than a fintech, and I'm sympathetic to that idea. It's about creating new kinds of markets which work better than the old markets did.
And ironically, at a time when banks are struggling with the age-old issues about their license to operate and the role of banks in society and the importance of transparency in financial markets, right?
I think there are different models for looking at what banks do in society. But if you break banks down into their constituent functions, it's very clear that some of those functions could potentially be better performed by other. And actually, payments is a very good example. It's not transparently obvious why credit institutions should be the people managing payment institutions. I mean, historically they're connected, but logically they're sort of different things. So if you go into a world where you go into a world where people have these payment accounts and they move money between them, and those are quite separate from the provision of credit as a function, what people call the transfer functions, and the pooling functions whereby people save money. You can see those beginning to separate, and technology sort of pulling those apart. And what that would mean, I think, in practice, is that there are some areas where new technologies like the blockchain, shared ledgers, Bitcoin, might take some of those functions and do them in a new and different and better way. I mean, one analogy I sort of think of is I remember like 20 years ago, in the first flush of enthusiasm about the new technology of smart cards, we all got really into the idea of you could have offline electronic purses, the days of Mondex and Visa Cash and all these kind of things. And it turns out they never really worked out in payments. We went debit instead. But the technology platforms that we put in place, the multi-application operating systems for the smart cards, became the platforms for chip and pin and all sorts of. And I sort of wonder, you could sort of see a slight analogy in this space, which is actually Bitcoin isn't terribly interesting as a payment mechanism. But what if Bitcoin is interesting and important for something else, not payments? What if there are other functions to do with security and other kinds of transactions which actually are better suited to that kind of world? I mean, come on, how often do we see genuinely new technologies come into this space? It's not that often.
No.
And here is a genuinely new technology which has some really interesting and different characteristics. And based on the historical diffusion of new technologies, technologies often ended up being used for something completely different. And I wonder if that's true in this space.
So conceivably then, a bank is a trusted place where you store your funds and you access credit and your identity, and then connects via a range of technologies and APIs to people that are specialists in those domains.
I think that's a realistic vision, Adrian, and the reason why I think that is because if that way of thinking is right, if it's your identity and your reputation, which is really the most important attribute, the thing that you want managed the most effectively, and if the bank can create the personas that you need to go out and interact in these other spaces and turn them into safe spaces that you can, then that puts the bank at the centre of things again. So even though I might be using Facebook to send money from place to place, it's my bank identity that I'm using to establish my authority to do that, and I'm attaching the reputation to that as well. So I think what you've just outlined there is actually quite an appealing architecture.